The whole energy system has to be transformed. And
In 2020, BP made a surprising promise. The oil company would produce less oil.
We're heading to net zero, and there is no turning back.
It was a big bet on a rapid energy transition intended to ensure as fossil fuel use waned, BP had renewables to replace them. But 5 years on, the world has changed, and so's the chief executive. Under enormous shareholder pressure, he's changed course.
COVID, the war in Ukraine, a recession, and the shift in attitudes of markets and governments have a fundamental impact on the energy system. Our optimism for a fast transition was misplaced, and we went too far, too fast.
BP had pledged to cut oil production by 40% from 2.6 million barrels a day in 2019 to 1.5 million by 2030. That was increased to 2 million barrels a day 2 years ago. Now its target is 2.5 million, almost back to where it started. Meanwhile, it will cut spending on renewable energies by 75%. BP has been under pressure since the Deepwater Horizon rig exploded in 2010, the largest oil spill in US history, costing £60 billion in fines and compensation.
National energy.
But with Donald Trump in the White House,
Drill, baby, drill.
It has some political cover.
BP's turn away from the energy transition reflects the current reality that renewables are both more expensive and less profitable than fossil fuels. And increasing the return to shareholders in the short term could be good news for British investors who have BP shares in their pension funds. But as the government's own climate advisors have warned, delaying the transition comes at a price too.
This is a very, very short-term approach. They are taking a short-term share price boost at the expense of their long-term viability, because we know that the shift to renewables is where the future economy lies.
BP promised! BP lied!
BP's share price fell following the announcement. Giving up fossil fuels may be easier for consumers than for oil companies. Paul Kelso, Sky News.